Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Friday, the 9th of February, 2007. And let's see, the markets got smashed pretty good today. The S&P 500 was down a little bit over $1 here looking at the spiders. And it did break down below the level that we had identified yesterday as an important area of support potentially, and that being the 144 level. So we did get a close just below it, although it's right at that number. I don't think it's we're going to have to just be cautious in here, I think. This level, though, this prior resistance, should act as support. Let's see what happens. It's right there. I think that, you know, a penny or 2 pennies off doesn't really constitute a solid break until we get it to kind of fall down through that level. For the week, the market was down a little bit. The daily time frame here, for some reason, is showing a bad print. If we look at the 10-minute time frame, you can see that what I'd suggested yesterday was that this level right in here, the 144.30 level, was the important area of support in the short term. And breaking below that, there could be a good opportunity for a short sale that would be against the primary trend, and that we would be targeting for a move down towards 143, which basically would be giving up the entire gains since the Federal Reserve came out with their announcement on this day right here. So the market did get hit hard below that support level. The more time support is tested, the more likely it is to fail because those bids start to dry up, but people lose conviction. And I'd also noted that we had a lower high in here, and that made me a little bit cautious. So now we have a lower low to add to that. We've got a declining 5-day moving average, and now's the time to be very defensive in the short term. It might lead to a bigger breakdown in the bigger time frame. We don't know that yet. There's no point trying to predict that. I think that the important area for now is probably closer to this 50-day moving average, near about 142.5, where we have a prior level of support from this year as well too. So I think it's going to pay next week to just be very defensive, and you know, we're going to have to start to be a lot more selective in the trades that we take here, because it seems as though the tone of the market is changing right now. When we take a look at the Nasdaq 100, what I was looking for and what I'd put out there on the blog was that this 30-minute time frame, we could see this very well-defined inverted head and shoulders pattern, and that it had broken past the neckline, and that neckline was acting as support. Yesterday I was saying that basically we're going to give the benefit of the doubt to the buyers because it is in an uptrend here. However, if this 44.25 level failed, that would really put us on the defensive and put this whole move into question. So I had posted a chart midday saying from failed moves right in here, ... and the phrase is comes fast moves. So a lot of times when you have a widely watched area like this inverted head and shoulders pattern that gets people bullish, then the bulls give up over in here, and then the shorts really start to lean on their positions. A lot of times we can see a pretty severe breakdown. So we're going to have to be very cautious because this market has, as we've been noting, been pretty much trendless over the last now about 2 months or so. It's back to the middle part of that range, but it is in I think it's a very dangerous market right now, especially in the Nasdaq. You see that Google broke down a little bit today, and that kind of, you know, it just made a lower low since the earnings have come out, and that's a big drag on the psychology of a lot of investors in the Nasdaq 100. So I think our more important level of support is down near about 43.35, but we did break down today, and that's the area right here where I'd suggested that that's where we want to get very defensive, because it would put this move at jeopardy, and that's exactly what happened here. So the markets are showing signs that there are sellers out there. We've almost gotten through. I think we've gotten through most of the earnings reports, and the mid caps still continue to hold up good though. What we were looking for in here was support near the 154.5 level, 154.30. Right around in here, and that level broke as well. That's below the 5-day moving average. We've got all these other moving averages declining. So it looks like in the mid caps that the easy money has been made on this rally. Now it's time to button up those stops. Make sure that you're not giving what am I trying to say here? You're not giving back any big profits, and Still, I think it's early to get short in here, although there are obviously always going to be certain specific stocks that we can get short in, regardless of the overall market environment. So let's take a look at the stocks, and we'll start out with dollar, DLLR. That's the stock we'd gotten involved in at 30.05 yesterday, and I suggested raising your stop to 29.90. Very good thing to have a stop in there and take a small 15-cent loss, because now it's almost 75, 80 cents lower than where we got stopped out. So preservation of capital becomes the #1 priority, especially in a market that's volatile like this. And in Respironics we had gotten involved in, and the stock was looking pretty good. We got involved at 41.95, wanted to put our stop at $42.40. The stock gapped down a little bit today, so I'll say we got stopped out at 42.35 with a gain of 40 cents. And that's being conservative. You probably should have been able to make a little bit more money than that. ICGE we got involved in at $11.25, and we got stopped out of this one today at $11.33, almost near the lows for the day. But hey, you know what? That's trading, and you're better off getting out and being on the sidelines. How's the saying go? The saying goes something like, it's better to be on the sidelines wishing that you were in than being involved in the market and wishing you were out. So, you know, that's what stops do for us. They help us enforce that discipline so that we're not hanging on to these stocks as they turn into bigger losers. We got involved in Cirrus Logic at $7.90. I suggested raising your stop to $7.85. That didn't get hit. Let's raise it up to $7.88, and that'll give us 2 cents of risk, basically. United Airlines, UAUA, we got involved in here yesterday at $45.20 after the initial pullback, and I wanted to raise the stop to $44.76. And I'm going to say that if you got stopped out at $44.76, you ought to reconsider whether you should be trading or not, because this stock was up to over 46, about 46.5 today. So there was an opportunity for more than $1.30 in profit. Not that you would have necessarily sold the high, but when it starts breaking down, by all means, get out of the stock and take whatever profit you have. Or worst case, I'm going to say that we broke even in UAUA, but you should have done much better than that. Alexion, ALXN is our one short position, and that's working fairly well for us. We're involved at $40.95. Let's lower our stop to $40.10.